Bitcoin, Bitcoin, Bitcoin. It's everywhere you turn, right? Every day there's another headline. New highs, new lows, new billionaires jumping into the crypto game. Enough to make your head spin. But you're not satisfied with just the headlines. You want to know what's really going on, what's driving these market swings. And that's why we're doing this deep dive. You specifically asked about the forces shaping the latest moves. And let me tell you, these two articles I found, they're gold.
Oh, this is going to be good.
We're talking big money making big moves. First up, let's talk Bitcoin ETFs. Get this, they just pulled in a massive $254 million in a single day.
Wow.
Yeah, $250 million flowing in, and get this, it came after 3 straight days of outflows. Something's brewing here.
That's huge. And you know what's really fascinating is who is doing the buying. This isn't just the BlackRock effect everyone was talking about a while back.
Right.
Remember when their ETF launched? Everyone acted like that was the only sign of approval institutional investors needed. But this inflow, this tells a different story. This is telling us that other major players are starting to see Bitcoin as a legitimate asset. Volatility be damned.
It's like everyone was waiting for permission to join the party, and now they're all showing up at once. But it gets even more interesting. Fidelity's Bitcoin ETF. It's about to hit a colossal $10 billion.
Wow.
Right. It makes you think. Why is Bitcoin seeing this kind of love from institutional investors when Ethereum ETFs are, well, kind of lagging behind?
That's the million-dollar question, isn't it? And it probably comes down to a few key factors. Think about these big institutional investors. They're all about minimizing risk. They crave regulatory clarity.
Makes sense.
And when you compare Bitcoin to Ethereum, especially after all the upgrades and changes Ethereum's gone through recently, there's still a lot of uncertainty in the air.
So it's like Bitcoin is the reliable, if slightly predictable friend, while Ethereum is still figuring out its whole thing.
That's a great way to put it. Take the upcoming sharding upgrade for Ethereum, for example. It's supposed to make the network faster and more scalable. But the details about how it will impact security and gas fees, well, that's still up for debate. And for these big investors, uncertainty equals risk.
Got it. They want to see how it all shakes out before they jump in with both feet.
Exactly.
Okay, so you've got these institutional investors dipping their toes in the water with Bitcoin, some a little more cautiously than others. But then there's Michael Saylor.
Oh, boy.
This is where things get really interesting. This next article is all about his company, MicroStrategy, and let me tell you, Saylor isn't just dipping his toes in the Bitcoin pool, he's doing a cannonball.
He's gone all in, hasn't he?
Completely. He's essentially turned a software company into a Bitcoin holding company, betting everything on Bitcoin's success. He even predicted Bitcoin will hit $100 trillion.
Which is a lot.
To say the least. It's more money than exists in the world right now. But wait, there's more. MicroStrategy is actually using borrowed money to buy all this Bitcoin. They are playing a high-stakes game.
And that's where the risk gets really, really real. Borrowing money to invest is always a gamble, but when you're talking about something as volatile as Bitcoin, well, let's just say MicroStrategy is walking a tightrope. If Bitcoin's price drops significantly, they could be looking at something called a margin call.
A margin call? That doesn't sound good.
It's basically a polite way of saying, you owe us more money. Lenders get nervous when the value of their collateral drops, and in this case, that collateral is Bitcoin.
Yikes. So as bold as Saylor's strategy might seem, it comes with some serious risks.
Absolutely. It's crucial for everyday investors to understand that what Saylor's doing is extremely risky. It's like he's playing poker with the entire company's future on the line.
So we've got these institutional investors, some dipping their toes, some, diving headfirst into Bitcoin, and then there's Saylor, betting the whole farm. Two very different approaches, but both centered on Bitcoin. Is it just me, or is there something bigger going on here?
You're definitely onto something. I think both of these stories point to a fundamental shift in how the financial world sees Bitcoin.
Really?
Yeah, they tell us that Bitcoin is starting to be taken seriously by the big players.
Interesting.
Think about it. ETFs, they offer that sense of familiarity, that regulation that big institutions love. And then you have Saylor. Love him or hate him, he represents that high-risk, high-reward attitude that can move markets.
It's like two roads leading to the same destination. One's a bit safer, more familiar. The other, well, it's a bit more of a wild ride.
Exactly. And speaking of risks, remember that article that mentioned MicroStrategy's stock might be overbought?
Yeah.
That suggests some investors are so caught up in the Bitcoin hype that they're not really seeing the bigger picture, the risk that MicroStrategy is in.
They're so focused on the shiny new thing that they're missing the warning signs.
Exactly. Which is why it's so important for every investor to do their homework, to understand what they're investing in,
Yeah.
and understand their own risk tolerance. Chasing hype without really getting what's underneath, what the strategy is, that's a recipe for disaster.
Okay, so let's say, just for a second, that sailor is onto something. What happens if Bitcoin actually does become this cornerstone of the global financial system? What would that even look like?
That is the question, isn't it? Imagine a world where you have this decentralized digital gold that actually starts to challenge the traditional players. We could be talking about faster, cheaper transactions across borders, more people who've never had access to traditional banking suddenly able to participate. A wave of innovation in financial tech. It could be huge.
Wow. But that kind of shift, it can't all be good, can it? There have to be some downsides, right?
Of course. There are always two sides to every coin, right?
Mm-hmm.
Greater adoption of Bitcoin could mean even more volatility in global markets, headaches for governments trying to figure out how to regulate this new landscape. And you can bet that there will be those who find ways to exploit the system, new avenues for financial crime. Every revolution has its growing pains.
So it's not just about whether Bitcoin can succeed, it's about whether we can handle that success, right?
Exactly. It's a balancing act.
Yeah.
Harnessing the potential while figuring out how to minimize the risks.
Speaking of balancing acts, let's get back to those Ethereum ETFs. We've talked about the regulatory uncertainty, how complex its tech is. Is there something else holding them back? Why aren't they getting the same love from big investors that Bitcoin is?
Well, it's important to remember that Ethereum isn't just a cryptocurrency like Bitcoin. It's a platform, a foundation for building decentralized applications. dApps, we call them.
dApps, right?
Think of it like the App Store on your phone. But instead of being controlled by one company, it's powered by this decentralized network. It's more transparent, more resilient.
So it's like Bitcoin is this sleek sports car that everyone wants to drive, and Ethereum is this giant factory that could build all kinds of incredible vehicles.
That's a great way to put it. And anytime you have a complex technology, it takes people time to wrap their heads around it, especially when there's a lot of money on the line. And Ethereum's value isn't just about its price. It's about the success of this whole ecosystem of applications being built on top of it.
So investors might be taking the wait-and-see approach.
It's definitely possible. Remember, these big institutional investors, they're playing a different game than the rest of us. They need to see a clear path to profitability
Right.
and a stable regulatory environment.
Which Ethereum might not have quite yet.
Exactly. The SEC is still figuring out how to classify and regulate all of this, which makes Ethereum's future, at least from a regulatory perspective, a bit murkier than Bitcoin's.
So even though Bitcoin and Ethereum are both in the spotlight right now, the big money seems to be flowing where the rules are a little clearer. So it's like choosing between two different flavors, you know? You've got your classic Bitcoin, familiar, but it still packs a punch. And then there's Ethereum, this whole new flavor profile, maybe even a game changer. But maybe not for everybody, at least not yet.
That's a great way to put it. And it's fascinating to see how these two, Bitcoin and Ethereum, are kind of navigating the financial landscape, right? One attracting those established players, the ones who really value predictability, and the other drawing in the innovators, those who are, I don't know, maybe a bit more willing to bet on a decentralized future.
So where does that leave everybody else? You know, the everyday investors who see all this buzz around Bitcoin, but they aren't sure if it's just a game for those Wall Street whales.
You know, I get that question a lot, and honestly, it's what makes this whole crypto space so exciting. Because, yeah, sure, institutional money has a huge impact. It can really move those markets. But the beauty of cryptocurrencies is that they're accessible to anyone. You just need an internet connection.
So you're saying Bitcoin's not just for the super rich?
Not at all. It has the potential to really democratize finance. You know, giving everyday people more control over their own money, opening up new investment opportunities.
That's pretty cool.
It is. But, and this is a big but, it's still important to be cautious. This is uncharted territory for a lot of people.
Like learning to swim. You don't just jump in the deep end without any lessons or anything.
Exactly. Take the time to learn, understand the risks, and never, ever invest more than you could afford to lose. Because let's be real, it's still a new asset class and it's volatile. So buckle up. It's going to be a bumpy ride.
But hey, maybe that's part of the fun.
Maybe so.
So we've got these institutional investors testing the waters. We've got Michael Saylor going all in. And then you've got everyone else trying to figure out if they want a seat at the table. It's a wild time to be following Bitcoin, that's for sure.
It really is. And this story is far from over. As things keep developing, it's going to be interesting to see how that relationship between traditional finance and this whole crypto world, how that evolves.
You are absolutely right about that. Well, there you have it, folks. Bitcoin is having a moment. Whether it's the start of a financial revolution or just another chapter in a wild, wild ride, it's a story worth watching. Just remember, do your own research, think for yourself, and don't let the fear of missing out cloud your judgment. Until next time, happy diving.